Welcome back, Master Students, to week number 8-1 for earnings plays. I got to tell you that this is something that I have not introduced before. I didn't introduce it to the prior Master Students, none of the tracks. In fact, this is the first of its kind, and I am introducing it here as a first to you guys. And since we have such a segmented program now, and a continuous program, I am able to focus on different strategies like this because the markets consist of several cycles. So why don't we just go ahead and dive in here to earnings, because earnings season is among us, and we could be preparing ourselves for an interesting run here. So back in the day, I'm talking about late 90s, right? Ever since the markets were in their good old days, right? Without the extra participants that were introduced in such times like COVID and bull runs, like introducing massive squeezes like the VWAGI squeeze in 2010 and all that, right? So before those times, there was a time where the markets respected an EPS, right? Your earnings, the earnings release. There was a time where the markets were completely following a narrative that was relevant to the company's release. Ever since then, that narrative has changed, and in fact, it has inverted in a sense. I'm not saying that it's inverted in an unnatural way. It's just that there are several. I want to say several variables that can lead towards a potential sell-off or a continuation to the upside depending on the earnings release. Now, typically or historically, originally, this earnings release would come out, right, in the earnings sheet. And it would show us that the company's, let's just say in this example, the company's profitable. And that's great, right? Awesome. We have a profitable company and the stock price immediately goes up. And that's because the fundamentals had a lot to do with the continuation of a company's growth and a company's succession. And that was, a time. So ever since new market participants were starting to get introduced into the markets, earnings plays they've started to, in a sense, invert. Now, that's not saying that they're inverting I don't want to, you know what? I got to say it then. Screw it. It's a little manipulative, right? It does show a little bit of manipulation. I hesitate on saying things like that, guys, because oftentimes there is a natural explanation to everything. Similarly to like in 1947 for the Roswell incident, right? There's they put up this thing saying that it's a balloon. So they're gonna not tell you it's an alien. In this case, the alien is manipulation, right? So it's eerie and taboo. We don't talk about that, right? It's he whom we should never mention or say his name out loud or whatever, Voldemort. But it doesn't matter. It doesn't matter, right? So the fact is that, yeah, sure, we do have a little bit of manipulative action out there, specifically with the words that they say. We have analysts paying attention to every single individual tone and word that comes out from the CEO or the director that's leading the earnings release, right? This person would tell you on the actual forward guidance call after a positive earnings beat that they are working on a specific something, and out of nowhere, the stock, even though completely on a surprise and completely profitable, in that forward guidance call, they say that slight little off thing, and the thing capitulates 20 points right before your eyes. So that's what I mean. Once upon a time, it wasn't that critical. It wasn't that maniacal. It's lunacy, really. The amount of this guy said potentially 71 times more than normal. This is not natural. We're gonna capitulate the markets here. It's no good. So that's what our present market is like. That's what it's like right now. But it's okay. It's okay. That's just the nature of the beast, and that's fine. Now, when playing earnings, I have to say that the larger, and I will say this actually very cleanly to you, the mega caps is really where we want to stick to, right? The mega caps in the markets are the ones that we want to stick to. Now, I know that it's difficult to trade the earnings on these large mega caps, right? And that's because they're expensive and whatever else, right? It's hard to get any real gains off of something that's worth $500, $700. It's like, what do you do? You know what I mean? And now here's the thing. When I mean earnings plays, guys, I mean momentum and scalp trade, specifically scalp the markets. Now, how do we do that? Well, the tools have a lot to do with this. We want to stick to the mega plays, to the mega caps because of their extension, I think is the right word. The extension that they can provide for us. For example, here, let's go ahead and take a look at Meta on the chart and zoom in and take a look at what happened at this. Let me see if it was the last earnings release. Yeah, the last earnings release, right? This was just the time of, when was this? This was on July 2024. Okay, so that is your earnings little symbol here. And as you can see, it came out with an extremely positive EPS. Everything was great on this. Everything positive. Surprise of 9.39%. And we have an 809.5 million surprise on the revenue, right? 2.12% increase, which is absolutely outstanding, right? So the 12-hour time frame is what we're using here just to display what happened in the after hours. Why the after hours? Because in the after hours is when that's when the mega caps release. They do it in the post market. Guys, are you serious? Oh my goodness. All right, let's go ahead and release this thing all over again. Yeah, I was wondering why you guys were talking so much. Okay, so I've been talking like for 88 minutes. I'm going to... Oh my goodness, this is ridiculous, guys. I'm telling you, man, who hired this guy? Who put that guy in the mic? Fucking fire him. Good Lord. All right, so for those of you who are watching right now, you're going to hear the lecture perfectly in YouTube because it's recording, it's on, right? On YouTube, it's great, but I'm not going to restart it. So what I'm going to do here is just let you know that at what time frame are we in right now? I've been talking for the last 19 minutes. You guys are out of your mind. So let's go ahead and restart this whole thing. Yeah, that's really upsetting. And you're going to hear me cough like crazy too, man. Wow, this sucks. I can't tell you how many times I've done that with recordings too, man. Oh, guys, what? Come on, man. Well, when my cursor moved, I'm like, all right, so let's dive into the chart right here. We're going to take a look at blah, blah, blah. And you're like, we can't hear you. I'm like, damn. Well, isn't that very special? Yeah, let's get this thing. Let's get this thing started. Okay, so earnings plays, guys. Welcome back, master students, right? To Strategies 8-1 for earnings plays. Now, earnings traditionally, historically, back in the 90s, we would report earnings, right? And the companies would say, you know what, great, we are on the balance sheet, right? They would say, great, we're bullish. Everything is looking good. The stock prices would rise. Everyone who was following the balance sheet historically knew this. They were already good. Long the position on the day before, long the position before the market closed, in expectations that the price action would go up based on positive EPS, positive revenue, the company growth, right? Remember, guys, that this started officially at 19 minutes now, okay? Or just at around 20 minutes, which is insane. So that earnings release would come out and price action would go up. Now, the problem here is that we introduced new market participants. And new market participants, like, back in the COVID days and the days when the VWAG squeezed in 2009, 2010, 2011, whenever that was, 1,100-point rise. That added a little certain something to the markets. It started to invert the narrative of earnings plays, my apologies. So earnings plays now started to, even if we had a positive EPS, the thing would just dip for some reason. Because now, Gray Man, I am talking. Can you hear me? I am, buddy. All right, good. All right, so nowadays, right, your earnings, I remember Netflix, I think last year, third or fourth quarter, I think it was the third quarter, they released a positive EP. I'm talking about, I think it was close to a $2 billion, net gain. And the surprise was, I don't know how many percent, it was actually high. It was big. And the asset capitulated 22 points. It dropped $22 on that earnings release. Now, why the hell would that happen, right? Why in the world? And everybody was expecting this, right? Netflix was booming. They had just introduced the fact that they had purchased all the Universal Pictures, the storylines and the big production companies, and they applied it to their roster. And they started creating, 2 years of now Netflix originals and growing. And it dropped 22 points. It's just like that, right? Like, why would that happen? Now, what's happening here is that there have been new metrics introduced to, in a way, stimulate the price action during an earnings release. So now it's not about the balance sheet anymore. It's not about the actual earnings data. It's also about the forward guidance call, the physical call, the one that happens typically right after that earnings release, the data. That moves the asset incredibly. Now we have analysts and professionals and who the hell ever counting the amount of times that you say potentially. This guy said it 71 times more than normal. This thing is going to capitulate. I don't like it. What the hell is going on here? You know what I mean? So now they got these new, it's just insane. So the narrative is now completely brand new. We have to get used to it. Now the earnings plays are not what they used to be. They're not as easy as buying the options contract the day before or before market close and waiting for the thing to gap up or down based on negative or positive EPS. And the thing just either, moons your contracts or just it gives you a small gain. It's no longer that. The words are paid attention to. So that means that now there is an infinite variable. Or we can just call it a 50-50. Literally, mitad y mitad, 50% chance that you would get an increase in your asset. It's just, you really have to know your asset though, the one that you're trading. Because now, looking historically, it did well with the positive earnings release, but now not anymore. So there's new data being introduced. And if you guys remember from our beginner's mentorship, the candle analysis was only introduced to the Western world in 91. So we're still, the markets are still essentially in their infancy, even though that the S&P 500 or the, SPX has been running there since the late 1800s. We're still very young, very, very young. So that's the new earnings narrative, Zoe. This started changing as of 2020, man. It started changing at the beginning of the 2010s, really. Then started adding more metrics and started adding more trickery. And then when we started having more market participants due to COVID, that's right when it started going even more insane. We want to stick to the mega caps when trading earnings. I am not talking about swinging. I am talking about scalping and momentum trading, specifically scalp the earnings plays during it. Yeah, I took over. During the earnings call, we will learn how to trade that volatility, because I'm going to be honest with you right now. The earnings season for a lot of professional traders is the season where they make their most gains and they make their bankroll to trade the rest of the year. This is the time. And specifically what assets? Now that we know that there is a complete inverted narrative behind your earnings call, you could either go up or down here. No one knows. Now that we know that, we're able to take advantage of a certain type of asset. So no, I wouldn't like for you guys to consider trading small caps, micro caps, mids, or large. We must trade mega. That's where the opportunities lay. And the reason why is simple. The reason why we trade mega is because of the range, the extension. So let's take a look here in the chart and really find out exactly what I mean by extension. This is your earnings release, the last earnings release that we had back in July 2024, the end of July. So we're using the 12-hour candle here because you can see that this is released in the post-market. So the market closes, 5 to 10 minutes later, they release the data. 15 to 30 minutes later, or maybe even an hour or whatever, they start the forward guidance call. So when that happens, the price action starts to react. Now, on this period of 24 hours after the earnings call, this thing ran from 462 to 516. And then on the next 12-hour candle, it ran to 527. We're talking about an almost 70-point move to the upside that Meta did on an earnings call in 1.5 days. That extension is why we're talking about it. The previous earnings release to that was this. Here is the earnings release right here. Check that out. Opens at 507 in the first 12-hour candle, dips all the way down to 485. Another 20-point drop. Following a 24-hour candle, it drops all the way to 398. Guys, 130 points, 120 points. You kidding me? This is why we take over and we use the mega caps, because of their extension. Okay? It's because of their extension. Kat, you're the only one I'm letting in here. Okay? I need you to repeat this, and I need you to come back when we start the strategies too, okay? You make sure to repeat this. Okay. Because I care about you, and I know that you got it in you. Okay. So, what I want from you guys is actually to know that we are talking about scalping, and this requires a certain tool. Not everyone is going to be ready to get this tool just yet, but I have to introduce it to you. The tool is Dash Trader. You can use any other execution platform as long as you have real-time data. You need to pay for the real-time data. Now, the reason why I use Dash Trader, or you can use Sterling, you maybe even be able to get away with it using Thinkorswim, but specifically the paid version with all the bells and whistles and the live market data. But you need execution time. This is not only the most profitable time of the year for day traders. It's not only the most profitable time, but it's also the most dangerous. This is the make or break moment for day traders. And this is why day traders lever hard in these times, because they will make their trading portfolio for the rest of the year on earnings plays. One good earnings season, because this is happening quarterly. One good earnings can make your year of a trading portfolio. So you could fall into feeling drugged, and you're going to want to do all the earnings plays. Be careful in overtrading earnings. It is possible. Scalping earnings is where we're talking about, okay? So let's go ahead and put this like that. We're going to be using the 3, okay? We could use a 2-minute time frame too, but let's just say the 2, 3, 5, the hourly. Let's go down to one of those micro times and take a look. Actually, you know what? Let me just go down to the 3-minute. Let's do that. Okay. This is the July earnings release, right? Cool. Look what happens here in 3 minutes. The moment that this thing is released, I am talking about on the 6th minute, because 5 minutes into the after hours is when the earnings release gets played. 475. In 3 minutes, this thing jumps to $515, guys. Do you see what I mean? You need to be able to react into this. The strategy is very simple. And it must be played this way. Options flow. The way that we can track the upside probabilities on this are through the sentiment of options. This would be telling you that we go to the open interest on the options contracts and we look at usually, the week or the Friday that whatever asset that we're trading is expiring on, right? That whatever it is that has the biggest open interest in that week or the day. So whatever has the open interest to the upside. So let's just say this thing said it was going to go all the way to 530 or whatever. So we mark off 530 like this on the call side because it has the biggest open interest there. And on the put side is telling you that this thing would probably run to 418 or 420. So let's just leave it there. So you mark this off here. Then you compare the open interest between the call side and the put side. If the open interest is larger towards the call side, our probabilities are upside. It's not always that simple. It's not. But those are your probabilities. Now, I wasn't going to mention this until somebody asked me this is more to do with executions, but I'm going to touch on it now, okay? When you are playing, this is after hours. There is no stop loss and there are no market orders. You hear me? Limit orders only in and out. That's where the danger lays or lies, whatever. You cannot set any stop loss and you cannot set any market order to just get in quickly. That's where your Dash Trader or Sterling come in. Because they can do inside of the settings for your buttons when you program it. This is how I have it programmed. You can program it to limit, enter up or down $1, up or down 25 cents, up or down 15 cents, 1 cent, whatever you want on limit. So you press limit and the thing sets 2. 1 above, 1 below. Enter. One cancels the other. So when we're talking about fast moves, I'm leaving that thing at I'm leaving that thing at a 15 cent, up or down. Because I know that this can run to 530. We're sitting at 470. Options flow is telling me this thing is gonna run to 530. Holy crap. 15 cents are good. Sterling Trader and Dash Trader will literally have it through your own code so that you're able to enter the market 15 cents plus or minus the execution. The moment you press it, the thing will trigger that limit. As soon as it passes any of those, it will enter long or short. Okay? That's what makes it special. Thinkorswim, yes, they do that too. Here is the next thing that I was going to mention to you because it's part of executions. When you decide to enter, heads up on your day's high. Always remember your prior day's high or your existing day's high. Your day's low. Always remember. Never forget those things. Your pre-market low and your pre-market high. In this case, pre-market high, confluent to the intraday low. That's all good. It is a good strategy. For the shortcut button, having your buttons, it's set. Hotkeys. I personally use a Stream Deck. I have two 32 button Stream Decks programmed to enter the market with any different type of order that I want, market limit, and with different amounts, with different stop losses and take profits. And you can set that all for you. That's only for shares. That's right. Options contracts are not at all valid during the after hours. Now, mind your day's high. Why? Because that's a critical resistance. Break above that day's high and the prior bar high, that's your entry without confirmation. You do not wait for confirmation on an earnings shoot. That is the institutional way to trap you. Do not wait for validation or confirmation of any kind in your earnings play. As soon as you break those highs, you're long. Because this thing will explode that direction. And when that direction goes, you better be ready for that price because you're going to see your thing fluctuate up and down so fast. And then it'll just shoot to the bottom within 3 minutes. Guys, I'm sorry. Within 9 minutes, this thing went from 470 to 515, right? 45 points to the upside, and it went 50 points to the downside. You can lose your ass on this, okay? So if you entered up here, you hesitated too much, you came down all the way and lost all your money. Have to be careful on this strategy. The way you buy is not only to break the upside. Here's the execution. The execution has to be with a tight spread. If you are not focused on your bid and ask, you will lose your ass and you will get filled in the wrong place if you're not using a Dash Trader type. If you're entering open limits, you can really miss out on the play. You really will lose the play. You will not enter it. I will highly, highly recommend not to use anything other than that, Hydra. Other than those three. I highly recommend that you do not do that. We're talking 3 minutes here that this thing ran. 3. Sometimes the execution on Robinhood can take up to 10 seconds. That could be your whole play. So, the bid and ask. If you're noticing that the bid and ask spread starts getting wide, so people are betting, they want to buy this at 460, right? So the 460 bids are increasing. But then the people who are already in are trying to sell at freaking 490, 500, and they're stacking at the upside. You're going to notice that spread widen. Volatility is going to widen, expand like crazy in a moment's notice. When the volatility contracts, when it dips down, when it contracts immediately down to, say you want to enter here at the break of the high, 476, you are longing between 475 bid and 480 bid. That's your long. The moment it contracts, that's your entry. If you do not enter in that fashion, you will miss it. You will miss it. Okay? It is critical for you to make sure to enter the market in that fashion only. So this is what I mean by an executions strategy. This is shown to you in the executions course after this course. There are many ways to do this. Bid and ask can be found through your level 2 that you get provided with your DAS trader on real-time data. It's going to be on what's called your montage. The montage is going to have your hotkeys, your buttons, and it's going to have your level 2 in real time. You are going to see that skyrocket in speed. As soon as it starts moving any bit to the upside, the numbers on the left side of the bid, I don't think I have an image for my, DAS montage. Let me see. If I do have one, then that'll be great so that I can show you what it kind of looks like. The montage is just your buy, sell, right? It's going to be your buy, sell, short, and cover. You take a look at these screenshots here. See if we got something for you. And what I was saying here is that the speed, the rate of change that you're going to notice come in on the bids and the ask, you're going to see them go like it's going to go like, you're going to see the numbers speed up like crazy. And you're going to see the spread widen between the people trying to buy at a low and the people trying to sell at a high. You have to wait until it tightens up and it slows down. The timing is very critical on this. Okay? So when that slows down and the spread tightens into that small pocket, the smallest available pocket, that's your entry. And if it is not done in that way, you could suffer. All right? So let me go ahead. Yeah, my goodness. That doesn't have my level 2. Let me see. That one also doesn't have my level 2. Okay, but I guess I can just sort of just show you what this looks like. This is what my montage looks like, and the level 2 is on top, right? Let me show it to you. Here you go. This is what my montage looks like. Buy 400 with a stop loss of 1, period, right? Buy 300, stop loss at $1.25. Short 400, short 300, short 225, right? Stop loss to break even. This is an incredible feature when you're trading the markets outside of earnings plays. That's really where you want to be. The stop loss to break even will make you, it's sort of a trailing stop. It follows you. And if it crosses the point where you triggered it, it'll just take all the profit. The level 2 is located right above this area here. You have the bids on the left, higher and lower bids, ask, higher and lower asks on the right and left. You're going to see that those numbers are going to increase incredibly fast. When that tightens up, you enter. Also, when price action goes up, you're going to notice that the spread widens again. and it widens and it widens and it widens and then it starts to contract. That's your exit. Your job is to enter the market when it contracts at that small pocket. It could be seconds. You enter that, the thing rockets to the upside. You see it expanding. Then when it reaches the pinnacle, you're going to start noticing the contraction immediately. That's your exit. No feelings, no ifs, ands, or buts. You get out, no matter the upside. If it has more, then it has more. Great. Your job is done. In that move, you just made 60 points, 50 points, 40 points, whatever it was within that zone. That's why we play the mega caps. That's simply why, team. I guess I have an image here that's probably the closest I can get. Sorry, guys, I didn't take the best images in the world, but this is my DAS platform. And you can see here, this is the bid and ask on the top of the montage. You set here, you set this to limit instead of market. Okay? So that's how that happens, guys. I need you to be very careful with this. Okay? But the analysis is done through the means of, no, guys, that's what I mean. I took terrible pictures. It doesn't show the center. It's just, look at the picture zoomed out. See? Yeah, I know. That sucks. Nothing. Here we go. This is another picture, but okay. I guess I could show you the montage for my options. This is the option side of my DAS trader. I have it on market always, daily and 5-minute always. This gives you the daily traditional chart, and this gives you the chart for historical price on the option that you choose. These are your puts. These are your calls. This is at market close, so it's not giving you the metrics. I have this with open interest here and price. The position is shown here. You double click on this side and it shows you the chart historically with moving averages, what that options contract has done since it's open. Your, hold on, let me see this. Get rid of some things here, team. I think this is the place where you can see your positions. Testing out positions, right? And the way that you are, let me see if I have a couple here. So that's the way it would look, right? Tesla. And let me show you now what the chart looks like. This was a short play. Multiple entries here. Partial exit. Buy the strength, short the strength, cover, short the strength, cover. That was that play right there was this. There is another one here too. This was Tesla. Entry here and exit here. To test your balls, right? To see if you can hold throughout the rubble. This is another play. Buying the strength. Buy. Partial sell, a little bit of fear. partial sell. We confirmed the upside, buy, partial sell, buy, final sell. These are minute time frames, guys. Very, very micro times. Tiny, tiny times. That was, hold on. That was this one. And I believe I had, that was a smaller one. The third one that I showed you was this. So I just want to display to you guys that it is very profitable. Okay, team, it's profitable to do it. But I want you guys to be very careful and know for a fact this, team. I need you to know this, okay? Because I don't like sharing gains. I don't like being that guy. I'm not that, you know? I suspended myself from trading the larger account because I was starting to get too greedy and drew down about a month. And that's not okay. So I'll stop. I'll stop before I lose my entire ass. No, I never trade in seconds. I trade on a 2-minute minimum. Everybody has their own different style, guys. It's no problem. It doesn't mean anything else. It's just what you're most comfortable with. But there's a way to do things in the market. I suspended myself from trading that large account because I drew down for a month and my strategies weren't working. My executions weren't working. Psychologically, I was not there. So I stopped. Thank you, bro. Option says because you're smart. We have to be. So I stopped, you know, and I preserved myself. Here's the thing, guys. You were always with me. All of you. You were with me. I was drawing down, but my call outs were fine. My targets all hit. But that's the importance, and that's why I say it to you all the time. It's one thing to call out the play, but it's quite another to execute the play. You could lose your ass for 3 months, 5 months, a year. Yeah, it is, guys. There's no way I'll have somebody as good as Options agree with me if he didn't know that exact meaning, you know? My goodness. He's a very talented trader. He's a very talented investor. It means to me a great deal that I can have him validated. It shows, guys. It shows awesome validity. You know, I want to be as transparent as I can with you, but I will also say that I'm not the flex guy. You know, I'm not the dude who likes to brag, right? So I'm showing you my personal entries and exits so that you can see. My master students, you guys will get it, okay? This is me entering contracts at 31 cents. This is me selling multiple contracts at 107. But you can see that whatever I learned from Tom Hogard is very valid. It's longing with size, right? Depending on your play. Release profits as you go up, but as soon as you break inflection and validate the inflection being the gap, right? This validates a support. I'm longing it here and I'm longing it here with a little bit of fear. Let go of a little bit, long, full out. This play was around $11,000 last year sometime. I don't know when the hell it was, somewhere. But it was great, guys. You're not in the trading floor. You're not going to hear me talk like this ever. It's just only to you. I feel like that I owe only my master students that transparency. I won't ever do that. I don't like, guys. I could go somewhere and rent out a Lambo and just and say, learn how to own a car like mine. Join my master's course, bro. I don't give a shit about any of that, guys. I'm not about that. I'm not. But what I want to do is continue showing you with the targets being met. Like, let the play be the play, right? If you can let the play be the play and show your numbers, I want that to speak. Not a car, right? Not the gains that I put up, all that. Sure, it can help with marketing, but I feel like it's morally wrong. I just feel like it's morally wrong. So I'm not going to do that. I'm like, yeah, literally that, freaking. I did ask could, guys. I did ask could, but I'm not going to do that. I'm not going to do that. I'm not going to be that guy. Guys, professional traders literally make fun of dudes like that. But if we can do it, then let's fucking roll it, But I will say this. I'll fucking wrap a car, though. I won't put it in any videos, but I'll wrap it. I'll put ARCa Bulls in that motherfucker. I'll drive it. Literally that, bro. Check out that video, guys. But team, this was the execution and strategy course for earnings plays. I hope that this was informative to you. And this is also kind of a display to show you what's available coming to your executions course after this. So make sure you guys, if you haven't signed up already, make sure to fulfill that as soon as you can. And let's get you rolled into that. So, Guardian and Kat, you guys are officially in. I think Torito told you already, but you guys are in for strategies and you're in. This is gonna be a good thing. He is awesome. So, guys. So you let me know if you have any questions here. I think somebody asked me a question up there that I didn't answer. My apologies. That was ARCa. Can institutions buy before hours? Then the rest of us, like 2 a.m. Why some stocks? Yeah. Oh, absolutely. Sure. That's why we track volatility, really. It's they can purchase. They actually, Ian, I love you, buddy. You may want to watch this one too, because this was slightly different. When you pull the data into a file from TV again, it's up here. Well, I'm sorry. What was I just saying, guys? I lost it because I'm being ridiculous. Right here. Turn file sharing on, copy link. Export data, and then go into ISO. In any time frame that you're in. What was I just saying? I totally lost what I was saying. Institutional buying? Oh yeah, that's right. Yes. It's not in the lit exchange. It's both. It's both selling and it's actually transfers. It's actual trades. But they're called block trades. That's because they're done in massive quantities. Which is why Pacific time, midnight to 1 a.m., let's say it's 12:15, which is 3:59 a.m. to 4 a.m. Eastern time, market time. The shift, then that 1 minute is enormous. It's huge. It's very big. So that allows you to see that allows you to see this really interesting price gap It's like, why did the price close at this one point? And then it just out of nowhere, it's huge. So it's called order block trades, and they are usually done in the dark pool. It's outside of the lit exchange. It's in the dark exchanges. But they're able to move price like that. And we're able to see that in volatility, not to the extent to where we can see the numbers, but we're, things like, I think Ortex gives you, and Fintel, they give you delayed dark pool trades or something. There are a few things that can give you dark pool trades, but not real time, right? But we can see the shift in volatility in the immediate short term using my indicator, using linear volatility. Like, I can show you an example. Let's go. I'll do one for you. Here, there's one. You see the blue shaded area? This is post hours. Do you see the yellow shaded area? This is pre-hours. So, price action on Meta closed at 477, but for some reason, at that 1 minute, opened up at around 480. When this happens, we notice this in real time. But no one has the data to see exactly what happened. And do you guys remember the footprint model? We track volatility and the expansion phases, right? The contractive phases. Well, now you know why. Because we can see their every move without knowing how much they did, but we can see that it's critical. And if there's enough critical in a certain fashion, then we have iteration. Through iteration, we have mathematics, statistics. Through statistics, we get introduced to probability. Systems. I've built this to automatically trade the markets with risk. So, institutionally speaking, when a hedge launches, this can be what I'm teaching you manually is what's the forecast max algorithm. That would be the proprietary algorithm running the passive gains for the institution automatically. All we do is maintain the script. I built it so that I can trade consolidating markets, bull markets, and bear markets. So it's robust against any condition, which is giving me the returns larger than the biggest returns that you're getting from the biggest institution today, Rentec. I want to see that live, in live cash. They're returning 44% annually ROI. The algorithm that I've built here is returning 143% annually. $200 a month if you do it through Interactive Brokers, Schwab. Capital Markets Elite Group will let you trade outside of PDT. It's a London bank for $250 a month on Dash Trader with a minimum of $500. If you trade Dash Trader on Interactive Brokers, an American broker, it's going to require, for you to trade freely, it's going to require you the PDT minimum, which is $25,000 any trading day. If you pass or, if you fall below the $25,000 threshold, it locks you out of trading. So your zero mark is quite literally $25,000. They want to make sure that you have the capital to cover. You give $1,000 to CME, they'll give you $1,000 in leverage. Put 10,000, they give you 10. Put 50, they'll give you 50. I would suggest not keeping any more than $15,000 in a CMEG account, Capital Markets Elite Group. They are reputable, but it is a London bank. It's out of the country, so be careful. Maybe no more than 20,000, so, but you can trade with leverage. You can trade. You can put in $10,000. You have $20,000 in leverage. So be careful how you do that. Okay, team? But yeah. If we're good to go, we got a market prep to handle. We got a MSTR to look at. So saying, what is the correlation between SPY and the SPX? Can you chart one and trade the other? Yes and no. They are completely related. The ETF is what the SPY is. That is to the S&P 500. The SPX is your major index. Now, the ETF for equities is your SPY, and your future reflection of the SPX is your ES. So the ES ticker is the S&P 500 E-mini futures contracts, right? The MES is your micro E-minis. Those are the micro E-mini futures contracts. But you could essentially do what you're saying. Yes. $5,500 is usually around it's usually around 540, 538 SPY. Sometimes they meet 5,500 to 550. Sometimes it does that. But the SPX is very interesting. Like the NDX, which is the NASDAQ. They don't trade on volume. Be careful. They trade on contract. So if you're tracking volume, track the volume through the means. Yeah, that'll hand your ass in a hurry. Track the volume through the means of the ES futures or the SPY. That's my my quick little warning out to you guys. If you want to try liquid, if you want to try to trade liquid markets, that's where it's at. It's there. It's and futures, really. But trading the biggest volatility that you can trade beyond futures range is the major indices. Trading the Dow, trading the DJI, trading the NDX and the SPX. That is big boy volatility. I'm talking about chaos, like big numbers, big upside, big downside. Contracts can return big money there. Yeah. But yeah, I mean, when you trade futures, it's the same type of thing. The contracts in futures, they don't abide by the Greeks. They're not time decayed either. It's nothing like that. The contract is just like a share. You buy one, you sell one. It's not consistent of any 100 shares within the contract. It's nothing like that. It's just called a contract. And the contract is the agreement for you to sell the contract within the threshold available to you to sell, because there's a 1 hour closure. 23 days a week. Right? So it closes, I believe, on Saturday and regains conditions into Sunday. And there's a 1 hour closure per day. So when you're trading that, your contractual agreement is that you buy one contract and you're going to sell it before the futures market close, the hourly close. And if you don't, then you're going to have enough capital in your account to margin maintenance that buy. You would have to buy it. And it's $5,000. The NDX, the Dow, $43,000. You don't want to be there. All right. So, day trading, momentum and scalp trading is really futures. That's incredible. Liquid markets. That's where it's at. And here's the other little secret to you guys. The futures market is outside of dark pool trading. It is outside of price manipulation. There is no contracts manipulating the markets, no extra puts into the supply or calls to influence price up or down. That is the raw essence of true price action in futures. True technicals are played there. In the futures contracts is where a lot of the traders today that I know make their biggest returns. Equity markets, their biggest returns are usually done through the means of earnings season. Executions in futures is different than the executions in equity, or are different. So know that, you guys. If you want to practice true price action, observe futures. Okay? Futures is an interesting thing. I set up futures account, but have no idea how to trade futures yet. Yeah, it really is just like I said. You decide to buy one contract and you sell one. It's just as simple as that. And you see the gain. Here's the thing. For if you're trading the ES, right? S&P 500 E-mini futures contracts. Let's just say it's at 5,500. It's calculated in the point system. So it's 5,500 points. For every point that it moves towards the upside, that is equivalent to $50 gain per contract to you. There is about a 60-point average true range in the ES today, up or down. So that means that for every one contract, for every point, you get 50. The E-minis, the MES, the micro E-minis, those give you, yes, by tick. And the tick, okay, yes. Thank you, Hydra. So the ticks are set by quarters. Points are individual points, meaning 501, 502, 503. Ticks are set by quarters. Futures contracts will not go in between a quarter, a half, 3/4, and in a whole. So 0, 25, 50, 75, 0, 25, 50, 75 is your tick basis. Point basis is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and so on. For every point you complete to the upside, you get $50. And the thing has around 40 to 60 points of average true range in a day. So imagine you longed 5 contracts. 5 times 50 times 40. It's pretty nice. It's pretty big. So now, for those of you that can't afford to have a futures account to trade the ES, there's the micro E-minis. The micro E-minis are also done by the same point and quarter tick basis. Except that for every point that you go up, you get $12. Exactly, Grayman. $12 per point. Now remember that this is levered, right? This is levered. You're using margin here. Take profit traders where it's at. No joke. So you're able to lose your ass 12 points to the downside or 12 points to the upside. Okay, so manage your risk. I think so. I think futures are better. Yeah, well, that's because we don't mess with futures. We don't fuck with it, right? We need futures to give us the future valuations of, we have orange juice in there. We have seed. We have metals, commodities. We have, we literally have everything traded through futures. We cannot mess with that. Those are true. That's true data. It's true data. So that's outside of manipulation. It's outside of dark pools. It's outside of all of that narrative. It's outside of it. But it's dangerous. Right? Very dangerous. So be careful. I think the cheapest brokerage to start one off, not non-funded, right? It's like your own personal, your own cash. It would be your AMP brokerage. Hydra saying you need to have another course, dude. After this is executions. That's going to be a 12 to 14 week mentorship after strategies. Oh, for futures, right? Strategy and executions and futures, the same thing. Yeah, it could be a whole other course. Look how long we've been talking about it this whole time, right? But yeah, team, it is quite the lucrative. It's quite the lucrative trade there. But I will tell you this too. The best charters, the best price action readers are often the ones that are most profitable in futures. They shine there. Learn your price action. Learn raw price. The way we've been observing your candles, behavior, that's where it's at. Tori trades. Yeah, she's good. She's okay. She has only, she's good at her one strategy. She's good. She trades platinum. She trades oil. She does her thing. She defends herself. It's okay. She doesn't pride herself to be the greatest trader in the world, which is amazing, right? But she's also a little closed off. I've spoken to her personally. And she doesn't, and I understand it. She's mastered the one strategy, and it's the trend line regression, right? She doesn't like to complicate her world. It's okay. It's okay. There's a different trader for every different situation. But she's cute, and she actually lives an hour from me. She lives in Silver Lake, and she's now that she's reaching numbers, guys. I talked to her when I was at 700 followers in YouTube, 700, and she was already at 5,000 or 4,000 on YouTube, and that's when I talked to her. And she was saying, bro, I don't understand anything you're saying. And she's like, I don't want to. She was telling me, I don't want to mess around with anything like that because I just do what I do, and I'm just going to stick to that. I'm like, that's respectable. That's okay. You stick to it. You do it. So I think that her career is not as much the trade anymore. I think it's actually the influence. Because out of nowhere, like I don't even know how she did this, but out of nowhere, when I was reaching 6,000 subscribers, she was reaching 60 or 40 or something. No, it wasn't options. And you're not a speaker up here, buddy. Only if you choose to be a speaker will you hear your mic. So I think she's making a great amount of cash through influence. But, she had to make it in some way. So then that's a good representation for anyone who's a trader. Like, you master the one strategy, master it, know it like the back of your hands. But then you may miss out on opportunities that the markets can give you. Right? I spent a great deal of time on currencies, crypto as well. I've already spent a great deal of time on futures. I've spent a great deal of time on OTCs. I've spent a lot of time on IPOs, small caps, mid, large, and now mega. I want to be well versed, and I spend a lot of time in discretion in reading raw price. No indicators, right? Training under the rain. And then I spent a lot of time coding and creating strategy algorithmically. I'm not kidding. I want to be the real deal. I want to be the entire well-versed trader all the way around. The full package. But it requires time and dedication, guys. It requires a lot of respect towards your craft. You all can do it too. You don't have to do algorithms. You don't have to do any of that. Your career, you don't have to be an influencer like me either. I just want to overachieve because my son was dying. You know, that's really why. So I set out to do everything as best as I can, as best as I could. And that's why, you know what I mean? But everyone can be this. You just need to have the imagination and the discipline. You need to have fun on this first. You need to focus outside of the cash. So you're the best, you're saying? No, brother. I think that I'm striving to be the best. Just like you are, brother. You know, we the best. Options just made me say it, guys. He said, dude, Options is shaping me up, man. He's literally coaching my ego. No, I'm not joking by that. He actually wants to do that for me. I love you, buddy. I'm the best. And that's what I told my son. That's what I told my son. I told him when he didn't understand any words. I told him I'm going to be the best trader anyone saw, son. Dying in bed, right? So that's what I told him, you know? So I try to be humble about those things, right? But like I said, maybe I can show my transparency here to you and not to the outside world too much. I do sometimes because Options likes me to do it, right? You will become the best if you think this way. Yeah. I love you, bud. But yeah, team, go look in the mirror and tell yourself you're the best. I actually do. Shh, don't say that to fucking anyone. Oh my goodness. Bro, ask Nina what I do when I look in the mirror. She's in the fucking phone when she's... I'm like, God damn, you're fucking good looking, bro. You're so good at what you do. I'm like, look at that motherfucker, sharp as fuck today. Let's go. And she's over there cracking up, bro. I'm not even kidding. She knows my true self, bro. That's messed up. ARCa, when phase reveal? What the hell, dude? I was here the last time I showed you guys. Don't you remember? I showed you guys. Because I showed you guys. All right, fine. Yeah, I'll show you. Let me just go ahead and end the stream here on YouTube because I'm not going to stream that. So YouTube has ended. I'll show you me. And